I would go secondary cities. I would avoid the hotspots. Yes, we've bought in London, had a joint venture, as you mentioned, Paul, with Oxford Properties in a prime great asset, but I wouldn't really think that would be the best idea. Let's go for regional cities. I would try again despite having burnt my fingers twice in Birmingham and Manchester. But then I would go to my home turf, which I think I know quite well, Germany. Germany's secondary cities, which many of the competitors and the sovereign wealth fund would even know how to pronounce, spell, or even to locate them on a map without Google and so on. So I think we'd play on the home turf. And there's a few great players, also local operators to team up with. We wouldn't need this, given our strength locally and domestically, but others who may want to follow that strategy, being herd animals, core investors are herd animals, they could actually come in and find local partners to do the same. There's quite a few of these cities, of course, but let's look into Cologne, for example. Let's think of Stuttgart, which is a very geographically supply-constrained market, given the geology. And a third one, well, you can think of. I would even think smaller lot sizes. I mean, I would pick places like Karlsruhe in the south, quite strong. Even Augsburg. I mean, not big lot sizes, but you've got only 500 billion to spend. That's not much for a FIFA representative. So you can spread it around. And I think the spread would say is in the order of 150 to 200, 150, 175 bips still. But that's really a liquidity premium, a risk premium for lack of liquidity, let's face it.
Great. Linus.
So to clarify, is this for a core strategy or just invest in any real estate?
No, I would go for a core strategy. I'm feeling quite core currently.
Okay. I would go long in German secondary cities in good locations and good tenants. I would go long in France and Paris outside the CBD, where you can get a good yield for long income and get cheap financing. Can I go short?
You can.
I would short certain parts of a large capital and parts of the Nordics.
Okay. Good. I know you're a lawyer, so you can't possibly advise me, but
there won't be anything left after the fees. I think a similar strategy to Martin. I mean, if Union are there, then it's got to be a good strategy. But I think looking at multifamily around regional transport hubs would be an area I think will be of interest. Probably steering away from retail. I think there is a lot of disruption in the real estate market. We haven't really touched on it now, but there is huge amounts of disruption in terms of office occupiers, retail occupiers. The way that people live, the way that people shop is going to hugely change the entirety of the market, and I think the investment fundamentals are maybe 2 or 3 years behind properly understanding how that is going to flow through. So in London, when we used to speak about 20-year leases and 5-yearly upward-only rent reviews, that's gone. People are coming and spending £350 on a desk and then disappearing the next day. So the whole market is changing, and because of that, I think my strategy would be trying to be ahead of the curve, try to look to where that sense of community is investing, and that will be not necessarily in the core cities, but the secondary cities.
Great. Laurent.
Well, unfortunately, I strongly believe that you need to have local knowledge to do that real estate business. So I cannot advise for other countries, unfortunately, than France. And in France, I would rather go in Paris, maybe around Paris, in some, like Linus said, some kind of cities just around Paris where you can find some kind of core plus locations with upside potential. I mean, we've recently secured for a large institutional investor a very nice building, which is going to yield something like 7.5% for 10 years with a long-term lease with Orange, the French telco. And after that, if the tenant were to go, which is not sure, then there is a very strong upside potential because you have huge constructability potential. You're just around one of the famous new Grand Paris train station, which is to be built. So real upside potential and a good yield on the midterm. So that's the kind of thing I would suggest.